All right, everybody, welcome back to Talk Tickers, the show that breaks down complex earnings calls.
Easy to understand insights?
I'm joined today by...
And I am.
And we're going to be diving into Bionano Genomics' Q4 2024 earnings call today.
Yep, that's right. Exciting company.
A lot going on.
Really interesting space they're in.
So, as always, we're going to start off with...
A snapshot of the results.
Give you those big numbers, and then we're going to dive in deep into some of the...
trends.
The strategy.
Yeah. Big picture stuff.
All that fun stuff.
Exactly.
So Bionano, they reported total revenue of $8.2 million for the fourth quarter of 2024.
Okay.
And that is actually a decrease of 24% compared to Q4 2023.
All right, so down a bit.
Yeah. So on the surface,
yeah,
not great news.
Not the direction you want to see.
Not the direction you want to see, exactly.
Right.
But here's where it gets interesting.
Okay.
Gross margins saw a huge jump.
Ooh, that is interesting.
Both GAAP and non-GAAP gross margins reached 42% in Q4 2024.
Wow, okay.
Which is almost double what they were in the same period last year.
Okay, so
that's 23 and 24% respectively in 2023.
That's a big improvement.
Yeah. So that's the first sign that maybe things aren't
as bad as
they
they seem, yeah.
appear. Yeah.
Yeah.
And so operating expenses also went down significantly as well. GAAP operating expenses decreased to $15.4 million from $27.4 million.
Right.
And non-GAAP operating expenses went down to $10.6 million from $26.6 million year over year.
So pretty consistent decrease there.
Yeah, pretty consistent decrease there.
Okay.
Now, this is a big takeaway because it's a result of a couple things.
Right.
First is a decrease in the fair value of contingent consideration.
Okay.
Which is related to the Purigen acquisition milestones and the results of their cost-saving initiatives.
So they're tightening the belt.
Which they've been doing.
It sounds like.
Yeah. So their balance sheet as of December 31st, 2024 shows cash equivalents and available for sale securities of $20.9 million.
Okay.
But worth noting that $11.4 million of that is restricted.
Yeah, got to keep that in mind.
But they have been...
They're working with what they got.
They are working with what they got.
Yeah.
And they've extended their cash runway into Q1 of 2026.
All right, that's pretty good.
Through ATM sales modifications to the terms of their convertible debenture and a registered direct offering that they completed in January.
Okay, so they pulled a few levers there.
So they've been busy. Yeah.
Yeah.
So now looking at the full year 2024 for product revenue. So this includes instruments, consumables, and software actually increased by 1% to reach $27 million for the year.
Okay, so a little bit of growth.
Yeah, so a little bit of growth there.
Okay.
But if we look at the components of that instrument, sales actually decreased by about $2 million.
Okay.
But thankfully, they were offset by growth in consumables and software.
Right.
Consumables grew by 14% to reach $12.8 million.
All right.
And their software sales increased 11% to reach $6.2 million for the year.
Okay, so good growth.
Yeah, pretty good growth.
In those segments.
Exactly.
Geographically, they also had some good stuff going on.
Oh, yeah.
Sales in both the Americas and EMEA regions were up.
Okay.
9% in the Americas and 10% in EMEA in 2024.
So they're seeing good global growth.
Yeah, very good global growth.
Yeah.
And we also saw a significant increase in their nanochannel array flow cells sold with over 30,000 units shipped in 2024.
Wow, okay.
Representing a 15% increase year over year.
So people are using the products.
People are using the product.
Okay, good.
Now, finally, looking at the full year gross margin again, GAAP gross margin was impacted by some one-time non-cash adjustments.
Okay.
But non-GAAP gross margin improved to 35% in 2024, up from 28% in 2023.
So the underlying business is looking.
Exactly. So these financial results kind of set the stage for understanding the deeper strategic recalibration that Bionano is undergoing.
Right.
As they emphasized during the call, their core focus now is on their optical genome mapping business, or OGM.
OGM. So if you're not familiar, OGM allows for visualization of long DNA molecules to detect structural variations that traditional sequencing methods might miss.
Okay.
They're concentrating its application in areas like hematologic malignancies, constitutional genetic disorders, solid tumors, and increasingly in the rapidly growing field of cell and gene therapy.
Okay, so very cutting edge.
Yeah, very cutting edge.
Very important stuff.
Important stuff, yeah.
Got it.
And part of this recalibration involved a shift in their go-to-market strategy back in September 2024.
Okay.
So they've moved away from just trying to acquire as many new customers as possible.
Right.
And now they're prioritizing conserving cash and focusing their efforts on their existing customer base.
Okay, so doubling down.
Yeah, doubling down, exactly. Specifically, those labs that are already routinely using their Saphir and Stratis systems for cytogenomics.
No.
And cytogenomics, for those who might not know, is the study of chromosome structure and function in relation to disease.
All right, makes sense.
So this revised strategy is built on 4 pillars.
All right, let's hear them.
So number 1 is supporting their current installed base.
Okay.
Particularly those customers who are already frequent users of their OGM technology and their VIA software.
Right.
The second pillar is driving increased utilization of their platforms by encouraging greater adoption of their VIA software.
Okay, so get more people using it.
Exactly.
Got it.
The third is continuing to build the body of evidence and advocate for OGM reimbursement and its inclusion in clinical and medical guidelines.
Mm-hmm.
And fourth is improving their overall profitability and scalability through cost reductions and increased sales volume to their core users.
Okay, so it sounds like they're really focusing on their existing customer base.
They are laser focused.
Okay.
Now, that first pillar highlights the importance of those existing reliable customers.
Yeah.
They mentioned that a core group of approximately 118 customers are responsible for more than 80% of their consumables purchases and growth over the past couple of years.
Wow, okay. So really those
118 customers driving a lot.
Customers,
Yeah.
Sure.
Primarily located in the U.S., Canada, Europe, and Israel.
Okay.
And these aren't just occasional users.
Cool.
These labs are routinely using OGM as an alternative to more traditional cytogenetic methods like karyotyping, which involves looking at chromosomes under a microscope, and FIH, or fluorescence in situ hybridization, a technique used to detect specific DNA sequences on chromosomes.
Okay.
So these customers are really bought into the platform.
Yeah, it sounds like it.
Yeah.
Okay.
And what's really interesting is that
What's that?
Bionano is explicitly focusing on these routine users.
Okay.
So by prioritizing these labs, they're essentially focusing on consistent, predictable revenue streams rather than the potentially more volatile revenue. Yeah, chasing new customers that may or may not adopt the technology.
Yeah, makes sense.
So their strategy is now heavily geared towards increasing the revenue they generate per customer within this core group, rather than just solely focusing on expanding the number of installations.
Right. So it's not just about getting it out there. It's about making sure that they're using it.
Making sure people use it.
Yeah.
And they estimate the average revenue per routine use customer to be in the $85,000 to $90,000 range based on their current consumables revenue.
Oh, wow. That's a pretty good number.
Yeah. So that kind of underscores the potential within their existing customer base if they can deepen those relationships and drive higher utilization.
It's okay.
Now, VIA software is really instrumental in this strategy.
VIA software. Okay.
It's used for analyzing data generated from both OGM and non-OGM sources. And it appears to be a driver of increased utilization.
Okay.
They reported a substantial increase in VIA installations.
At OGM customer sites, jumping from just 40 at the end of 2023 to over 160 by the end of 2024.
Wow, that's a big jump.
That's a huge jump,
Yeah.
So the key benefit of VIA is its ability to automate the complex process of curating and reporting on genetic variants.
Got it.
So this automation allows labs to process samples much more quickly, potentially expanding the menu of genetic tests and analyses they can offer.
All right, so it's more efficient.
So it's not just about using OGM more, it's about making the entire workflow more efficient for their existing customer.
Yeah, streamlining things.
Got it. And another critical component of their strategy is the continued growth in peer-reviewed publications that support the clinical utility and applications of OGM.
Right.
They saw a 19% increase in total publications in 2024.
Okay.
And even more impressive, a 39% increase in publications focused on clinical research and cell and gene therapy applications.
So they're really building up the...
Yeah, they're really
building the data.
to support this.
And this is crucial for building the case for reimbursement by insurance providers and the inclusion of OGM in established medical guidelines.
Makes sense.
And they've already achieved a significant milestone on the reimbursement front.
What's that?
The American Medical Association, or AMA, established a Category 1 CPT code specifically for the use of OGM in the diagnosis and management of hematologic malignancies. And this code became effective on January 1st of this year.
So it's brand new.
Brand new, yeah.
Wow.
And a Category 1 CPT code signifies that the procedure is well established and widely accepted within the medical community.
So this is a big deal.
This is a big deal, yeah.
Okay.
The reimbursement rate associated with this new CPT code is around $1,300.
Okay.
Bionano noted that this is generally consistent with some existing PLA codes that are already in place for OGM in other areas, so like constitutional genetic disorders.
Right.
While they acknowledge that there are some higher-priced PLA codes for hematologic malignancies already in use, the establishment of this Category 1 code could lead to broader and more consistent reimbursement.
Got it.
And they also mentioned the possibility of price reconsideration for this new code as adoption grows and its value becomes more evident.
Yeah, makes sense.
Yeah.
They want to see how it works.
So on the financial management side, it's clear that their cost-cutting efforts are starting to bear fruit, contributing to that consistent increase in their non-GAAP gross margin over the past 8 quarters. While they are anticipating some ongoing volatility in margins, the overall trend suggests improved financial discipline.
Right.
Looking ahead to the rest of the year, Bionano has provided revenue guidance for the full year 2025, projecting a range of $29 million to $32 million. For the first quarter of 2025 specifically, they expect revenue to be in the $6.2 to $6.3 million range.
So pretty specific there.
Yeah, all right.
Now, their target for 2025 in terms of expanding the installed base is 15 to 20 new OGM systems.
Okay. And they expect a majority of these installations to be at those high-value routine use sites.
Okay, so they're really going after those high-value customers.
They're really focused on that, including both existing customers looking to expand their capabilities and new customers who fit that same profile of likely high utilization.
Got it.
Now, while they're focusing on maximizing revenue from their existing routine users, they did mention that they will selectively pursue new customer acquisition opportunities. Particularly those that offer a lower cost of acquisition. But have the potential for high utilization. So they're going to be a little...
beggars can't be choosers.
Picky,
Right.
They specifically pointed to leveraging the momentum of the new CPT code in the U.S. And the increasing interest and adoption in the European markets as key areas for this new customer growth.
So, yeah, I mean, it makes sense to, you know, go after those lower cost.
Exactly. Now, they also highlighted the progress with Stratus Compute, their collaboration with NVIDIA, which is designed to significantly improve the speed of data analysis for users of their high-throughput Stratus system. And they have further software updates planned to continue enhancing its performance.
So they're really improving the software,
software
tech side of things. They also reiterated that adoption of OGM is currently being driven by its advantages in analyzing hematologic malignancies. Where traditional methods like karyotyping and Phi-Eich have limitations in detecting certain types of structural variations. Constitutional genetic disorders remain a strong second area of adoption. And they are seeing growing interest and applications in solid tumor analysis and cell and gene therapy development.
So
a lot of applications.
All this tech.
And they anticipate further expansion of their menu of applications within each of these important areas.
So it really seems like Bionano is executing a deliberate pivot. They're moving towards a more focused and hopefully sustainable growth model by concentrating on the value proposition of OGM for those core routine users and by prioritizing profitability over rapid expansion.
Makes sense.
So this kind of focus strategy can often be a sign of a maturing company, one that's recognizing where its strengths lie and is doubling down on those areas. So it's going to be interesting to see how this strategy plays out in the coming quarters.
Definitely curious to see where they go.
All right, so you know what time it is.
What time is it?
It's time for This Is Not Financial Advice.
Ooh, I love this segment.
Where we take some insights from the deep dive and spin out an outrageous, but plausible
trade idea.
All right, I'm ready.
So big emphasis on the not financial advice part.
Yes, this is just for fun.
This is just for fun.
Given Bionano's clear strategic shift to high-value routine users, their positive momentum in consumable sales, despite the overall revenue decrease, and their laser focus on profitability.
Right.
Here's a contrarian thought for you.
All right, lay it on me.
Go long Bionano.
Okay.
But hedge that long position by simultaneously shorting companies that are significantly reliant on providing traditional cytogenetic equipment and services. So companies whose primary revenue streams come from karyotyping systems, FISH probes, and related services.
Got it. So you're thinking like the old school players.
The old school players who haven't transitioned.
Who haven't gotten on board with the new tech.
Exactly. So the core thesis here is that the increasing adoption and crucially the expanding reimbursement landscape for OGM, particularly with that new Category 1 CPT code in hematologic malignancies, will gradually start to erode the market share of these older, more limited technologies.
So you're thinking like a classic disruption play.
Yeah, classic. Where the new tech starts to take over. Exactly.
Okay, I like it.
As OGM becomes more widely accepted and reimbursed, labs may begin to shift their budgets and workflows away from traditional methods.
Makes sense.
Now, this is far from a sure thing.
Sure.
Bionano still faces risks.
Of course.
Including their ability to manage their cash runway.
Right.
And the pace of OGM adoption in areas beyond hematologic malignancies.
Yeah.
And, predicting the decline of established technologies is always tricky.
It is.
However, if the trend continues with increasing clinical validation, broader reimbursement, and more efficient workflows, this paired trade could offer an interesting asymmetric upside.
Okay, I see what you're saying. Yeah.
You'd potentially benefit from Bionano's growth as OGM gains traction, while also profiting from the potential decline of companies heavily invested in the older paradigm.
Yeah.
So it's kind of a double whammy?
Both ways.
Exactly. Now, obviously, this is purely speculative, just not investment advice.
Not at all.
If you're considering this, you need to conduct your own thorough due diligence.
Well, always do your own research.
Absolutely. But just some food for thought.
Food for thought.
Based on our deep dive.
Yeah.
So that wraps up our deep dive into Bionano Genomics' latest earnings call. I hope this analysis has been helpful in understanding their results and their strategic shift.
It has been.
What do you think their focus on routine users is the right strategy?
I think it's a good move.
Yeah.
I think,
focusing on your base.
On what's working.
Exactly.
And really building out from there.
Makes a lot of sense.
Yeah.
So let us know what your key takeaways were in the comments.
Yeah, we're curious to hear your thoughts.
And as always, stay tuned to Talk Tickers for more deep dives into the earnings call.
Yeah, we'll be back.
That shape the industries that you follow.
With more.
See ya.